as we enter into the back half of September, let's take a look at several different charts. And I'm going to put a few on the screen that we haven't looked at before. Where we are as we officially head out of summer and into fall. So the first chart I have up for us to look at today is the SPY. This is the S&P 500 depository receipt. Basically, this is the S&P 500 crunched down into SPY, as most of you know it. Back at the beginning of summer, which is where we are in this area, we were below 600 on SPY. And as you can see, it's been a summer of love for the stock market. We are now coming into the end of summer with us up well over 10% just for summer. When you take a look at us being below 600, coming into just before Labor Day, or excuse me, Memorial Day, and where we are right now at around the 660 mark. So that is right around 10%, a 10% summer. Fantastic summer. Where do we go from here? I'm going to get to that, but let's look at some confirming charts. This is TLT. Now, this isn't typically what we see with stocks and bonds. Typically, one's rolling one way, one's rolling the other. But with the anticipation of rate cuts coming real soon, TLT has done an about face. In the last 2 weeks, we have gone from the lows of summer in the mid-80s to now new highs for summer in the last week, up above 90 for TLT, which is the iShares Barclay 20-year Treasury ETF. All right. Looking at stocks, high. Looking at bonds, high. USO is doing exactly what we expected to do because this is outside of its seasonal bullishness. Seasonal bullishness for USO typically ends in July, and then we start to see it move down. This would make sense also with what is going on with the Trump agenda. All right, Trump agenda. Drill, baby, drill has not been on the top of the Trump agenda. It is on the back burner, but let's be assured that that is actually continuing. It's just not front page news right now. But you can see with the markets, going back to the beginning of summer, we were trading in the 80s, right? The low to mid 80s for USO. This is USO, for those of you that don't know, is an ETF for oil and a little bit of natural gas thrown in. But more importantly, take a look at the chart. All right, we've gone from mid 80s down to low 70s, back to low 80s, back down to low 70s. And then we went to high 70s, back down to low 70s. Now we're sitting at mid 70s. This is an area right here that I would pay careful attention to if you like to trade oil or you like to trade oil stocks, because this area, once we get a close above 72 or below 72, I believe we're going into the high 60s soon after that. So we're expecting this downtrend to continue here for USO. And again, the stock market can continue to go higher and oil could trend lower, right? Another one that we see going higher is GLD, gold. And, I haven't seen an uptick in commercials for gold. All right. I still see the gold coins for sale on cable, all right, on certain television programs. I still see that. That goes on bullish or bearish with gold and GLD. But I haven't seen the onslaught. I haven't seen the onslaught of telling the retail public to put their money into gold. And to me, that continues to show signs of bullishness for gold and GLD. Gold and GLD have had the best returns. Gold has had the best returns since the 1980s, if you can remember what happened there. And when you adjust for inflation, GLD is now at new all-time highs adjusted for inflation. And we know it's been at new all-time highs for some time now, but when you add the inflation number in there, that just got hit a couple days ago. So big moves. If you can see what's happened with GLD for the summer, the low has been down here around 300. We're now trading in the mid 330s. So guess what? Tack another 10% on for GLD. The 10% came in the back half of summer, not in the front half of summer like it did for the stock market. So gold is really cranked up and started running here just in the last month. Hey, I'm Tom Gentile, America's Pattern Trader, and markets get rocky this time of the year. But this isn't my first rodeo, but the money counter is still delivering stock patterns with a 90% or better probability of profit, even in September, one of the bearish months in the market. Hey, get the patterns, the trades, and my playbook for just $9. And Bitcoin. So it's been a great summer for Bitcoin as well. As if you take a look at the at summer, and I went back. What was it? 100 days on BTC. I should have gone back a little bit more, but as you can see, we're trading below 100,000. Went from 100 to 124. 123, 375 to close area. So we could call that a 20 to 25% gain from low to high. But what's happened since then? So since then, we've seen a sell-off in Bitcoin. It's still bullish because we're seeing higher highs and lower highs as well. We pulled back down to around the 108 area, started to run back up. And even today, we topped 116, very close to 117 here for 2 of the last 5 days. A little bit of a pullback here today, being that Michael Saylor and the strategy group reported more Bitcoin purchases. And of course, that is now becoming a quick buy the news and then sell really quickly after the news event. But we're starting to see that down slot diminish here as we go into the afternoon. Another chart I want to show you is the MAGS chart. This is the MAG 7 chart put together. We actually took a trade on this, you and I, not too long ago, and did well on it. But MAGS is up 20% this summer. If you take a look at going back to June 20th again, and rallying all the way up to where we are right now, 20% moves this summer. And part of that, part of the news we're hearing about coming out of this weekend is that Google is now the 4th company to reach the $3 trillion market cap. All right. So congratulations to Google in coming in 4th place. Tesla is up big. We had a big jump on news last week on Tesla. And then again today, as Elon Musk has made a $1 billion purchase. It's not often that you see Elon Musk going in and purchasing his own stock. But this definitely pushed the stock up even more. And so that is also affecting the MAGS, the MAGS Roundhill MAG 7 ETF. And you can see since summer going from the low 50s up to the mid 60s, you're seeing really close to a 20% move just this summer in MAGS. And that just continues to confirm that the summer's been great for stocks. It's been great for not only the overall stock market, but it's been outperforming for assets like gold, Bitcoin, and technology. Right. So where does this all go? And a lot of people wonder, are we at the end? I've had conversations even over the weekend. Hasn't this market been overdone, Tom? And so what I did was I took the information from Yardeni Research. All right. This was also in Barron's Magazine not too long ago. And this goes all the way back nearly 100 years. And you look all the way back to 1928. The percentage moves that we had to have, decent-sized double digits. You had to be over 20% drawdown to be considered a pullback, and what happened afterwards. And I took the big movers because this is all some great stuff that you can go back and look at what happened after the Great Depression, etc. But I looked at a couple of huge moves. And so question is, are we in a super cycle? The average super cycle bull, if you take a look at all this data, is around 6.5 years. The average return, and I'm looking at the big moves that were over 100%, were 369%. We're currently, if you take a look at where we are, all right, and take a look at the big ones, we're nowhere near the Super Bulls of post-World War II, and that was looking at the 1949 to 1956 run, all right? Also, I looked at the 80s, And that was 82 through 87, where we gained 228% during that super cycle. And then you had the 87 to 2000 era. All right, that was better than a decade, where we clocked in some of the highest move. We clocked in the highest bull market ever, where we made over 550% during that time frame. After that, it was the 2009 after 2008 financial crisis, 2009 to 2020, 400% returns. Then we had the 2020 COVID pullback, but we had that 2020 to 2022 cycle. That was 114%. We had our pullback in 2022. And now, what has happened since 2022? 81%. So factor in, you might say to yourself, well, we're currently 81%, and we could be going up to that average 369. But what if we took out the 2022 pullback, right? And we just add 114 and 81, and then take out the 25. You're still only halfway there, right? So it's possible that we're still only halfway there, and it could be the reason why we may be moving higher is that we've got, again, technology. We've got technology. We've got adoption to things that we didn't have in even just 10 years ago. You know, look at AI. Look at what's going on in robotics. Look at what technology has given us that we didn't have just 10 years ago. So, are we in a super cycle? I believe we are, but it doesn't mean this is going up in a straight line. But I like the long game that I see here.